Are you worried and wondering what is going on right now with housing and mortgages right in the middle of this coronavirus situation we have going on? I'm Liza DeMarco, and today is April 17th, 2020. Stick around because I have a fabulous video conference that I did with Denise Lott from Draper and Kramer, one of my favorite mortgage brokers, and we're going to discuss together what is going on. And stick around way to the end because she gives some very great information at the very end of our time together. Okay, hi everybody. This is Liza DeMarco, your favorite realtor, and I have one of my favorite mortgage brokers here live with me. We're doing a Zoom call. She works for Draper and Kramer. I can't even tell you how many happy clients I have because of this woman, and she also helped me get my mortgage, which was really a trick. That was like that was a magical feat that she pulled off. And so the reason we're here today is because, as you know, this COVID-19 virus thing has really put us out of like commission in a lot of facets of our lives. And you who are watching are probably very curious as to what's going on in the real estate world. And what I'm seeing from my seat is that we're still transacting business and things are still closing. People are still shopping, especially online right now. But as things progress down this path of people not really working and not having those incomes that they're used to, we've got a whole new catalog of things that might be coming up and surprising us. So, Denise, I just wanted to see, first of all, tell me a little bit about you, your company, so we can get started and people can understand where you're coming from.
Sure. My name is Denise Lott, and I have been in the financial services world since 1987. Ooh, ow. In the mortgage world since 2001. Worked for a company called Draper and Kramer Mortgage. We had the third ever HUD license to originate loans in the United States and have been doing this since 1893. So company has just a little bit more experience than I do. And yeah, I mean, I have 2 kids and grandkids and love my job and love the financial world.
Fabulous. So, are you seeing that we're being impacted yet by this COVID-19 shutdown that's going on right now? Tell us.
Yeah, there's a ton of great impact to it and some not so great. So lending is still considered essential, as is real estate. So we are still selling homes and closing on mortgages and doing our thing as a company, and really well. Right before the whole COVID thing happened, market rates hit the all-time low in the past 10 years. So lots and lots of volume the first 2 weeks of March, then craziness the second 2 weeks of March. However, it has not slowed the real estate market in Georgia at all. What we have seen was a shrinking of the jumbo market. Nobody seems to want to lend on jumbo loans. We don't have investors. We have a few, but not a lot.
Not the jumbo, because a lot of people here might not understand.
So jumbo is over, the jumbo is over 510, 400 in our area. So a loan amount over the 510. There's no what they call market for it. There's no investors out there that want to take the chance in that marketplace for that loan size. A few of them are coming back. So, it's a little bit better, but it's not the way it was. However, the government-backed securities, where the federal government is buying as much as needs to be to keep our market up and going, and people, homeowners, rates are unbelievable, and they're closing, and it makes homes far more affordable.
How much are the rates currently? How much have they been? I know they've been historically low compared to when I bought my first home at 12%, which I thought was an amazing deal.
On a 5-year ARM? Because I'm pretty sure I had that same loan.
Yeah, no, that wasn't. That was owner financing in 1984, believe it or not.
Okay, so mine was 1987, and it was 12.75 on a 5-year ARM. Woohoo! And I thought that was great.
Well, my market was 18 to 20% was what was going on in the earlier 80s. So
Yes.
it was quite a time. So right now it's looking, 3% to me is like, oh my God, that's like.
And, depending on, like, rates are so subjective, people are like, hey, what's the rate? And I can throw a number out there, and could I probably get you that rate? Yeah, but it depends on your situation. So it depends on the product, whether it's a conventional loan or whether it's a government loan. Depends upon what your credit scores are. Depends upon what your loan to value is. Just to give you an example of a loan I just locked, conventional purchase, mid 700 credit scores, debt to income ratios were like 28-33, 28% on, principal, interest, taxes, insurance, 38 on the whole rest of it. And I locked it 3.125 on
Wow,
a 30-year fixed.
that's almost free. So
Exactly.
are the FHA and the VA, the first time home buyers and the veterans loans, are they still writing? Are they obtainable still?
Yeah, that's where the most money's coming into the market, is in those government, in those FHA loans and in those VA loans. That's what the money's coming in, and the government's buying all the mortgage-backed securities. So yes, I've locked an FHA with great credit, 3.5% down at 2.875 over the last.
Wow.
Yeah. So, it's kind of like, oh my gosh, they may not have been able. However, they increased all the credit scores. So we used to be able to close a loan. The rates weren't as great with a 580. Now they're not touching anything below a 620.
Okay, good to know. So, and with my experience with you and people that have worked with you, one of the things that makes you so valuable to me is that you help my clients understand where they are and where they need to be, and you know how to help them maneuver through maybe some of those little landmines to get them on track to close. So understanding what to pay down, not to spend money when they're in process. You do such a good job with that. And then I know from experience, you really go to bat for the people that you're working with. So I just want to know, like, I know you do that, and I know you do a lot in person, but I think you do mainly a lot over the phone. Is there any adjustments that you're making to anything that you do, or has it always been kind of like you deal with people over the phone and sometimes in person? How do you do things, basically?
Yeah, the majority of my work, I would say probably 95% of what I do is over the phone and over the internet. And then what I've had to adjust, I do that already, but what I've had to adjust to is not being able to finally meet people at closings. And you develop a relationship for 30 days, sometimes 60 days with people that, you're their lifeline to, not losing it. And, it's stressful. I mean, let's be serious. It's a huge investment. It's the largest financial investment anybody's going to make. And you develop really kind of a relationship that you want to meet, and you want to say, hey, I'm so happy for you, or they want to say thank you. And, now I'm like, hey, congratulations. And I feel terrible that, we've developed this and we've worked through sometimes challenges, sometimes it goes, relatively easy. And it's like, yeah, bye, see you soon kind of thing. So that's hard for me because I'm so relationship driven. That's hard.
Yeah, I understand that. They've got us now, like the realtors don't show up, and it's awkward because I like to show up, have a little gift for them, say goodbye, give the hugs, the whole. And so I'm noticing that the attorneys are holding their closings outside if they can, and the realtors are never invited anymore, which, it's kind of bittersweet, but I understand all of that. and it's going to be interesting going forward. Do you think, what kind of positive outcomes do you think we're going to see from all of this?
I think people are becoming more aware of one another and how they impact the people around them. That's just my experience from what I'm seeing with my team, with my referral sources, with my borrowers, that people are far more grateful, I think, for what they have and the ability of what they have, as opposed to taking things for granted. And for me, that's a really big takeaway for something that's so terrible.
Well, I'm seeing that too. And I think, just in my own world, I'm like, wow, I didn't realize how much I enjoyed or depended on going out and visiting with people and doing these different things that you really take for granted. And, just visiting with my clients, that's another downer, just not being able to have that fluidity and that person to person touch. I know a lot of people are really concerned about the financial markets right now, and that's why I'm having this call with you. From my side, I'm still seeing a lot of properties that are selling. We've got a lot of things coming online. My clients are putting their homes on the market. That these times have not stopped that, and I'm feeling like it's everything is kind of status quo, but everybody's nervous about it. Do you think we're going to maintain these lower rates going forward?
I think if I had a crystal ball, this is just my opinion, I don't have it, but I think they're going to stay relatively low for a while. They have to, because of, our world is a whole lot different. I lend all over the country, and pretty much everything is shut down in New York, New Jersey, and Pennsylvania. So the Northeast, nobody's buying. I have not closed a loan in the Northeast since the first week of March. I have not gotten a purchase contract, and I don't know any of my realtors that have had the opportunity. So I think here we're maybe isolated a little bit from it, because I have not seen a slowdown. We're working 24/7. Some of my company's working 7 days a week. Some people 16, 18 hours a day. Most of my team, 5 or 6 days a week, is working 16 to 18 hours a day, just to keep up to make sure that we make our closing dates. What I will say is that closing date times have pushed out, because we're having a challenge with getting appraisals back. We're having a challenge with getting title work back, because everything has to be done remotely. So, those 21-day closes or those 30-day closes are now going to be 30, 35, sometimes 40 days. And, and setting those expectations, because sometimes people don't want to hear it. We're subjected to what we have behind us. And if I can't get an appraiser to get out there because they don't want to go, or because there's somebody in the house, or, or they've got 15 in front of it, that creates a little bit of a challenge for us, but we're closing.
Well, I've been seeing that. I've been seeing that too, because every deal that I've had, every home purchase I've had on the table is actually very smoothly closed. We haven't had any hiccups, which is really good news as far as all of that goes. So I want to just kind of wrap it up. Do you have any words of wisdom or anything else we could add to help people understand that the market for buying really hasn't died? We still have loans being given out, and that people are still purchasing, and it seems like we're going to have a really good market going forward. What are your thoughts?
Yeah, I believe we're gonna have a great market moving forward. My takeaway for everyone would be, you need to have a job. You need to be working right now. Unemployment and the stimulus do not count as income in order to qualify for purchasing a new home. People are like, well, it's not my fault. And look, we understand it's not your fault, but if you can't verify income, Would you lend somebody money?
Right.
And that, and that's the whole thing. And we've got, we have so many essential workers in our area that market it's not dried up, and it won't dry up. And, pay your bills. If you have the money, pay your bills. Don't go crazy online shopping if you think you're going to buy a house when, everybody's let out. Don't go buy that new car now. Don't go, oh, I just saw a sale and buy, thousands of dollars worth of clothes that you really only need your jammies to work at your house for. Don't do those things. Continue to put your money away and work with a professional that understands what you're doing and how you're doing it, and that guides you the right way. That's kind of my takeaway for everyone.
Good. Well, I think in any market.
Yeah, but more so now.
I
may have a few deliveries coming to the door for when I'm allowed out.
Yeah.
Oh wait, that skirt's 50% off.
I know, it's crazy. Hey, Denise, thank you so much for giving me this time today. I'm so excited to have been hanging out with you here and giving us some of your feedback as far as what we're going through and what we think we're going to see coming out of this. So, as always, it's such a pleasure to hang out with you and chat, hopefully in person real soon.
Yes.
And I'm going to make sure that everybody has your information attached.
Thank you.
To our video.
Thanks.
Thanks again.
Thank you. Stay safe. Can't wait to see you.
I know. Me too. Take care.
Bye.
Bye. By the way, share, like, and subscribe to my channel because I will be posting more great ideas for you to follow. This is Liza DeMarco. Have a fabulous day.